place and that credit will not be an issue there. So we should see that moving forward here. Perhaps a deal would get done mid-April. Wilf?
Contessa, thank you so much for that. We have just under 15 minutes left of the session. Here's a check on the closing bell big board. The major averages, as you can see, are down significantly, but just off the lows. We're down 3.6% on the S&P 500. You're looking there at the biggest Dow laggards, McDonald's, Cisco Systems, American Express, to name but a few. A couple of banks thrown in there. They're slightly odd order for you from United Health and Boeing, down 6.8%.
Steph, last chance trade time. What are you going for?
I'm going for quality. L3 Harris. So that is the combination of L3 and Harris. And I owned this stock last year, and it was a wonderful performer. I took profits. The stock is now down 10%. Why do I like it? It's a special situation story. Basically, they have synergies between the two companies, and there was obviously some margin upside as a result of that. But there's also free cash flow generation that's going to improve this year and the next several years. They're guiding $3 billion for 2022, and I actually think they're going to be able to do that earlier than expected because they're making so much progress. They're going to then buy back 5 to 7% of their shares outstanding. So I like this. It's really kind of immune to coronavirus issues.
I think you should explain what they do. We don't talk about them that often.
It's a defense contractor, right? Sure. And by combining the two companies, they actually are a more formidable competitor to the big guys, right? So they're going to gain market share as well. And as I say, they have margin upside not only from the synergies, but also as they build their market share against their competition.
We have 14 minutes left of the trading day. We're now in the closing bell market zone. Commercial-free coverage of all of the action heading into the close.
CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got CNBC contributor Stephanie Link here as well. Let's kick things off with markets. Stocks plunging lower today as the 10-year Treasury yield hits a new record low. DoubleLine Capital's Jeffrey Gundlach appearing on CNBC's halftime report earlier today, weighing in on what he predicts the Fed will do next in response to any slowdown caused by coronavirus.
I think they cut 50 at the next meeting, and in just 2 weeks. I think that's going to happen. I don't think we'll go to negative rates. I think Jay Powell understands that negative rates are fatal to the global financial system. If we go to negative rates, there will be capital destruction en masse.
Gundlach predicting another 50 basis point cut. That's pretty much where the market is.
He's predicting what the market's been saying.
Yeah,
I mean, that's essentially what's going on. Now, could it change within the next couple of weeks? I suppose. But if you look at the 2-year note yield below 0.6%, when you have a federal funds rate at, 1% at this point. So that's what it's telling you. Essentially, the market has rushed to that place.
People are starting to contemplate zero. I haven't heard a lot of negative, but
the market's implicitly saying if the economy sags, it's pretty much a trip to zero over some period of time. Whether it's true or not, that's what the market is braced for.
And look, this is not going to fix coronavirus, right? But it is signaling at least that they're moving at a faster pace, and hopefully it instills some sort of confidence. Clearly, the move this week didn't really, because you had market up and then market down. But I guess another 50, I think, would say they're moving quickly to do whatever they can do. And then you see what happens on the news on the virus front.
I think it helps to weaken, or at least the Fed would hope maybe that it weakens the dollar a little bit, which puts a little pressure off the rest of the world and a little pressure off our exports, which the president wants to see, but not for necessarily that reason.
Dollar is certainly weakened because only thing I'd say is correlation between certainly applies to the banks, which we're about to talk about, but broader markets with yields is high. So another